Good evening, friends. My name is Rashmi Shah. I'm from Simplicity, and today I would like to talk about how we design our client's portfolio and how we are managing your portfolio during turbulent times, or how we are advising you. So, we had spent a lot of time in assuming that when you build a ship, the ship has to navigate through different phases in the sea, like high tide, low tide, thunderstorms, tsunamis come, correct? Earthquake may happen in the ocean. Oh, but the ship has to manage all those storms and navigate and keep the passengers safe. Now, same way, we have to design the portfolio when turbulent time comes in the stock market or financial markets. Our investment should withstand that, and that's the key behind it. Now, so in the current last 3 to 4 months, there has been a storm in every financial sector in the world, correct? Like the rupee has gone down by 15%, oil has gone up 15% up, and then as recently in last week, it has come down by 20%. Corrections in the capital market, for example, the large cap in India has fallen by 10, the mid cap and small cap has fallen by 20 and 50%. Now, the Dow also has fallen by more than 14-15%, and Nasdaq has fallen by about 18-19. So there's a correction worldwide. So how do we navigate? How do you manage your investment corpus during that time? So what is the storm correctly in the Indian financial market now? You see the current ship, the ship here is caught in the Indian elections. Mm, Next 8 to 9 months, there is going to be uncertainty who becomes the next prime minister of India. There is a real estate slump. Real estate is one of the biggest drivers of the economy anywhere in the world, like in US and in India. Um, Indian credit crisis, all the nationalized banks and NBFCs are going through severe liquidity crunch. We read that in the paper and see on the television every day. There's a trade war going on between US and China. Uh, by the way, that trade war between US and China is very beneficial to India because slowly, a lot of large global companies will move their business partially to India to mitigate the risk of China. So that's a good thing and a bad. Short term, it's a bad thing. Long term, it's a very good thing. U.S. interest rates are going up, so that's driving the dollar up and creating a volatility in the financial markets worldwide. Oil price first went up by 15 and now has gone down by 20. So this is the things happening. So we have to manage your portfolio during the same. So how do we do that? So I'm going to show you a small video, 30 seconds, at how a ship is designed. So this ship is designed by engineers to go through any kind of trouble in the sea, high tide, low tide. So you see a storm coming and see how the ship is navigating. So the hull of the ship is a large cap of your portfolio. The floor one, floor two, floor three is the sectorial funds, and the top is the US equity funds or international funds. That's how your portfolio has been designed. And see how the ship has been going, correct? It's going exactly now, as compared to that, you take a small family who's investing through newspapers and doing on things on his own, like this small boat. A small tide comes and see what happens to them. The portfolio goes for a toss. Now, the same strategy works in the financial market. So, how do we do that? How did we build a big ship for you? So, I'll give you an example by following a proper global diversification strategy. Now, what do you in my diversification strategy is that let's take the 8 mutual funds which we have used for investing for all our clients' money. Uh, what I'm trying to tell you is that we have 600 and odd families who are clients, and we are investing for all the clients in the same mutual funds. Now, what we do is we give higher and lower allocation based on their backgrounds, but the funds are the same. Now, of these 8 mutual funds, we took the top 15 stocks, which constitute 75% of their portfolio. Now, if those 8 into 15, that's 120 stocks. Now, which are those 120 stocks? Out of 120 stocks, 104 unique. Means that what I mean by unique means they are not repeated more than once. So 91 stocks are non-repetitive and are only in one mutual fund schemes. 10 stocks are in two mutual fund schemes, like Hindustan Lever maybe in two funds, correct? Um, Three stocks are only in three mutual fund schemes. So Infosys and State Bank may be in three mutual funds, but Microsoft Google, Apple are only in one fund. Cognizant is only in one fund. So these are the kind of stuff we have. We selected the mutual funds in such a way that the stocks are not common. Now, which are those stocks? Now, if you see the stocks are HDFC, Infosys, Abbott, Amazon, Johnson Control, Tech Mahindra, Westside. Westside means Trent. Now, these are the companies, Starbucks, correct? McDonald's. Now, these are the companies which has changed the life of people, and these are the companies with a management which know how to navigate during bad times or recession times. These are the companies who have huge cash reserves. They don't over leverage. They don't borrow. They they have very high ethical standards. They have very good internal control systems, and based on this, we selected mutual funds which had this kind of stocks. We didn't blindly or randomly pick up mutual funds. We had a complete thought process, like an engineer who designs a ship. He has a thought process where the ship is going to go, what kind of storm it's going to navigate. Same way we did that. Now, these are the companies which are going to change the life of people. Now, if these companies are going to change life of people and economies and countries, I'm sure they will navigate through all the storms and they will do very well when good time comes. Now, currently is the best time to invest in this kind of storms when everybody is scared of putting money in the stock market. That's the reason I'm sharing this presentation with you. And feel free to contact. Okay, so now if you have more questions, now coming back to the strategy. Now, if we have five mutual funds, what happens in our strategy? All funds don't go down or up at the same time. In last 3 4 months, when there was a correction in the market, three funds went down, went up, one on the sideways. When normal time comes, everything goes up except one or two funds may go sideways, like U.S. equity. So this is the way to design. Now, in retail investors, everything goes down or everything goes up. And they get a high return, high risk portfolio. Our portfolio is a low beta portfolio and low risk and decent returns. And that's how we work. Now, if you have any questions, feel free to contact us. Contact me, Jaideep, Sanket, Pooja, or anyone from our office, and we'll be glad to help you. Thank you for listening and have a nice weekend. Thank you. Thank you.